It's a big business. It's doing somewhere between 15 and $50 million of revenue. Again, at a 20% margin, that means that the cash flow that the business is generating, the free cash flow, is getting upwards close to $1 million. The multiples again, and we've talked consistently about this, as the business gets larger, the infrastructure gets larger, the number of clients gets larger, the predictability and consistency of the cash flow gets larger, the dependency that the business has on the owner gets smaller, and it makes these businesses, from a risk management standpoint, more attractive to buyers. And buyers measure their risk. Remember, they're buying cash flow, and they measure their risk off that cash flow based on the multiple that they're willing to pay for a business. And so when we get to a business of this size, because of the magnitude of the business, because of the infrastructure of the business, because of the consistency of the cash flow of the business, the multiples that a business of this size are going to be valued at greatly expand. We're talking about multiple ranges now, somewhere in the 10 to 12 times revenue. And so just applying the simple math here, if the business is generating $10 million of free cash flow and it's going to be valued at a multiple of somewhere between 10 and 12 times, that means the valuation of the business should be somewhere between $100 and $120 million. It's a big business. In terms of the buyers, businesses of this size, it's easy to identify who the buyers are. Again, when we think about buyer groups, there are 3 different buyer groups. We've got private equity firms that are doing roll-up consolidations. That's the first group. The second group are other strategic buyers, which are similar companies to yours that are looking to grow, looking to expand. And in addition to organic growth that they're achieving within the business, they're looking for acquisition opportunities that complement their current business model. And so the second group are strategic buyers, and strategic buyers of a business of this size. It takes a little bit of work, but it's fairly easy to identify who those potential buyers might be. The third group that we generally talk about are the owner operators. A business of this size is much too large for these guys, and so that group is not even considered. And so the 2 primary groups are private equity-backed consolidators or strategic buyers. And so there's going to be a lot of interest. It's going to be easy to identify potential buyers in these categories, and it's actually easy to market these larger businesses because it's easy to identify exactly who the buyers are. In terms of what the business structure looks like, again, it's a big business now. You could have upwards to 200 employees. The owner is really functioning as a strategic CEO. Oftentimes, businesses of this size, there are a couple of partners that could be co-owners in the business. You have a professional management team of that's implemented in a business of this size. You have an entire C-suite, if you will. You have a chief marketing officer. You have a chief revenue officer that's managing sales. You have a COO that's managing operations, which includes a support staff, and it includes the field staff. You've gone from a bookkeeper to a controller. You've got a true CFO that's in there that's helping you manage the business. You have a true professional human resources department that's got multiple people in it, and they're not only they're managing payroll, not only are they managing benefits, but they're managing culture. They're managing the morale. within the company. They're responsible for recruiting. They're responsible for retention. They're responsible for training. And so the importance and the magnitude of having a clear HR department that's involved in all areas of the business is critically important. And complementing the sales function, you've got a chief marketing officer also. And so you're very sophisticated and you're very robust in terms of what your marketing program looks like. You're putting a lot of resources and a lot of energy in that to continue to grow and expand the business. From the owner's perspective, and we'll get to this in a moment, from an owner's perspective, the owner is truly functioning as a strategic CEO. He's not involved in the day-to-day operations of the business. He has a C-suite that's managing the business for him or for them, and with them, there's a clear reporting structure. There are clear KPIs. There are clear metrics. The owner is involved in strategic decisions within the business itself, and so the business has reached the point where it's a self-managing business. You're looking for growth target rates at least 20% plus. Your gross margins are in the 40 to 50, sometimes more range. Your net margins are in the 20% range, maybe more. It's a true professionally managed business at this point. The owner's responsibilities are much more around strategy. It's around culture. It's around leadership. It's around growth. It's around acquisition possibilities within the business. And so the CEO owner is really involved in all of the strategic aspects of the business. Oftentimes businesses of this size, they actually have a board, and there's clear governance structure that's put in with board responsibilities that are helping the CEO manage the business with the support of the board. In terms of the owners, different areas that they're involved in the business and what their competency is and skill set is, you'll see across all of the areas, the owner is certainly overseeing those functions. He's not directly involved in the day-to-day management of those functions. And so acquisitions he's involved with, reporting he's involved with, finance he's involved with, leadership and culture he's involved with. He's overseeing the marketing activities, not on a day-to-day basis, but from a strategic standpoint. And he's managing these through the metrics and the KPIs that are rolling up and reporting to him. He's certainly knowledgeable of the operational functions. He's overseeing the sales functions from a metric standpoint. He's certainly involved in the growth strategy of the business, and he's aware in all the technology initiatives that the company has. And so not only are the areas of his responsibility from an oversight standpoint covering all 10 of the areas of responsibility, because he's been doing this now for a number of years, his competency in those areas and his confidence in those areas are reaching much higher levels. He's just getting much more comfortable with being involved in each of these functions. He has a lot more experience. She has a lot more experience. And so being proficient and being confident and being competent, it's reaching much higher levels because of his knowledge and because of his experience and because of the number of years that he's been involved in these functions. And so, it's a great business at this point. It's a professionally managed business. You have a C-suite of executives that are working with the owner. The business has a clear strategy. The business has been doing well for a number of years. And if the owner and the partners are considering a sale, it's always complicated to get a deal sold, but it's not difficult to determine who the potential buyers are. And so when a business reaches these levels, it's a very successful business, and it's a very attractive business to buyers. And so, I know many of you are not here yet. You might or might not have aspirations to reach these levels, but this at least gives you an idea of what a level 6 business looks like, and what the infrastructure looks like, and what the CEO's overall responsibilities are from a day-to-day management standpoint, what the financials look like, what the cash flow looks like, the multiple expansion, and what the valuation looks like. Hope this has been helpful. This is John Bartlett with Brentwood Growth, and if you have any questions, we'd love to talk to you. Thank you very much.